Welcome back everyone. So today I'm going to be covering the key points from the budget. Now before we jump into today's episode, I have the random number generated on the screen. This is the goal that I'm setting for the number of likes for this video. So the goal that I'm setting is 26. So you have to do is hit that thumbs up button right now and let's get into the video. Now for those unaware, the budget took place a couple of days ago back on the 3rd of March. And the budget is a financial plan which decides how the government is going to be raising funds for the following year and potentially future years, and outlines the decisions made in the form of changes in taxation. So let's go over the key changes, and first up is changes to corporation tax. So the corporation tax currently is set to 19%, but going forwards from 2023, that figure will be raised to 25%. Now if you are a small business with profits of £50,000 or less, then you will continue to pay the 19% rate, and anything above that will be subject to the 25% taxation. Now for most viewers that watch my channel, I'm going to make the assumption that no one is running their own business. So for most of you out there, this isn't going to be a policy that affects you, but if you work for a business that is on the larger side, then your company will be paying higher taxation when it comes to 2023. The ideal situation here is that such companies are able to pay these higher amounts in the form of tax. In reality, this can change quite a bit depending on the given company, but for most people out there, chances are you're not going to experience much of a change going forwards. So moving on to the personal income tax. And so from April 2022 to 2026, there's going to be a freeze on personal income tax. Now, just as a reminder for everyone out there, whenever we work for a given company, the first £12,500 is tax-free. So you pay no tax up to £12,500, and then between £12,500 and £50,000, there is a 20% tax. And then for anyone who's earning between £50,000 and £150,000, there's a 40% taxation. And then for those that earn over £150,000, any money above that threshold is subject to 45% tax. And so effectively freezing the personal tax income means that the percentages are all the same. So 20%, 40% and 45%, and also the thresholds. But what happens here is that everyone is effectively being pushed closer to the income tax bands. And so those individuals that are close to a given tax band will now find themselves crossing that threshold and then be subject to paying the higher percentage for that income over the threshold. And that's because when inflation hits year on year, these figures won't be adjusted. Now the same goes for national insurance and VAT. There's going to be no increases to the tax rate there, but due to inflation, this will naturally push people into those higher tax bands should they have pay rises in the future. And so usually these thresholds, they increase year on year to account for this increase in inflation. But as I mentioned, they're going to be frozen until April 2026. But something to call out is that from April 2021, there's going to be a few changes. So instead of the first £12,500 being tax-free, that's going to increase to £12,570. And then equally for the 20% tax threshold, it's now going to be between £12,570 and £50,270. And then for the 40% tax rate, that will just start from £50,270. And for those that invest outside of the stock and shares ISA account and therefore subject to capital gains tax, there's also going to be a freeze on the amount until 2026. So the figure to date is £12,300. It appears as though this figure is going to be the same going forwards, and very similar to all the other points previously when you account for inflation, because these numbers are no longer being adjusted every year. For instance, back in 2019 and 2020, there was increases in the capital gains amount that you could make, but that figure is going to be kept at £12,300. Now, in terms of these changes that have taken place, it's expected that the cost will be around 8 billion by the year 2025 to 2026. And that's the amount of money that the government will make from these measures. My overall opinion is that it's a very stealth-based way of making changes. For the average individual, they're going to assume that no changes have been made, given that for the most part the values are staying as they are currently. But without factoring the impact of inflation, it is a clever way for the government to make back money that they desperately need to do so. And overall, some of these changes could have been a lot worse. For instance, there were rumours that the capital gains was actually going to be removed. And equally in terms of the personal income tax, rumours were out there that it wasn't going to be tax-free and then people would have to pay a certain percentage on the first £12,500. That is not the case, so all in all it's a clever way of keeping these tax rates at the same level, but in turn actually increasing the tax that the government receives all the way up until 2026. So apologies for the very short video this week. I just wanted to be as concise as possible and highlight the key changes for everyone that invests out there. Of course, those that have the Stocks and Shares ISA account, there's very little impact given that you are not subject to any taxation there. For anyone that is new to my channel, I post new videos each week. Subscribe if you haven't done so already, and with that said, I'll catch you in the next one.